Virtual's protocol is having a hard time recently. It's one of the underperformers. It's doing worse than Bitcoin, Ethereum and Solana. The question is why? What's going on? Is this potentially a buying opportunity? In the end, it's all about buying low, selling high. We should be buying when nobody's watching. And Virtual's protocol does not have a lot of attention right now. Just have a look at how attention is evolving, because I've published several videos on Virtual's protocol regularly on this channel. And that very first video did get quite some attention. It outperformed the average video being here this gray area and the blue line being that first video. That was 288 days ago. At the time, the price was at 41 cents. So that was over here on this chart. Afterwards, we saw a 10x, then the subsequent bear market, and still from that first video, the price 3x'd. So if you want to be early next time, then feel free to subscribe over here. I publish videos on various cryptocurrencies regularly on this channel, and I try to be early. Now this month hasn't been that great. Virtual went down 22%. While Bitcoin stayed flat, Ethereum appreciated by 41%, driven by demand through the Ethereum ETF from Wall Street, and Solana also slightly appreciated. So what's going on? Why is Virtual doing that poorly? We're going to look at the on-chain data in a second. We're going to look at the drivers of demand and supply, because only if you can estimate where those are developing in the future, we can have a realistic picture of what's happening with the price. But first, let's start off with relative valuation charts, as in how is Virtual performing relative to Ethereum, relative to Solana, the two major chains of Virtual protocol. Virtual started out on the base chain, so that's a layer 2 on top of Ethereum. And so since base itself doesn't have a token, let's look at Virtual relative to ETH. Now what's interesting is that we are pretty close to a potential support. One could make the argument that the potential risk of maybe 12% isn't that much relative to the potential reward of a gain of more than 190%. The picture versus Solana though doesn't look that great. Here the potential downside is 45%. Virtual protocol is now the 8th largest trending token on the base chain, ordered by liquidity. So it's got 4.6 million worth of liquidity. Number 1 is of course Aerodrome, the leading decentralized exchange on the base chain. Number 2 is Kita. We talked about Kita also very early here on this channel. Feel free to check out the prior videos. Now, even though the Virtual token is now available on several chains, right? On Base, on Ethereum, on Solana, the main chain is still Base. And so Virtual can still be seen as a bet on the base chain, because the project grew with the adoption of Base. Now this is the total value locked of Base over time, measured in Ethereum. And as the base chain got more and more adoption, Virtual went up as well. And then in April of this year, things turned around. Suddenly, the capital on the base chain shrunk, relatively speaking. Now, Virtual protocol already started shrinking earlier than that. It had its peak at the beginning of the year, very similar to the Pump.Fun ecosystem. Fundamentally, the stories of Pump.Fun and the Virtual protocol are very different. Pump.Fun is the meme coin launchpad on Solana. Virtual protocol is the AI agent launchpad on the base chain. But in the end, both was a very much speculative bubble. Both platforms tended to be platforms launching new instruments for speculation. And so that speculation grew and subsequently collapsed. We then saw a secondary wave, and now we are relatively low in terms of revenue generation. So this is the fees or the revenues that Virtual protocol generates over time. But let's have a look at the on-chain metrics. Again, there are 3 different versions of the token. There is the base chain. Over here we've got almost 900,000 holders. Then we've got Ethereum. Here we've got 31,000 holders. And then we've got Solana. Here we've got 24,000 holders. I always like to look at what the retail investor versus the whale investor is doing, because sometimes we see a price rising while the whales tend to sell and retail is buying. So the whales are dumping on retail. Sometimes we see retail not doing anything and the whales buying everything up, potentially also pumping and dumping. It's always interesting to see actually what the dynamics within the market is doing. Now what we see here on the left, that's the number of retail investors. So how many wallets are there on the base chain that have at least 1,000 virtual tokens? Now in total there are 900,000 holders, but the people that have 1,000 tokens, that's way less holders. That's only 10,000 holders. So the vast majority of wallets don't hold much of virtual on the base chain. In the middle, we go a 10x in minimum holding, so it's now 10,000 tokens. On the right, it's another 10x, so 100,000 tokens. So you can see that all wallet cohorts tend to now sell their virtual. The number of holders is going down across the board. That's happening since February of this year for small retail. It's happening since the beginning of the year, since January for medium-sized retail, and it's happening also since January for the whales. So small retail tended to sell a bit later compared to the whales. The whales exited earlier. Now that's the base chain. Over here we've got the Ethereum chain. The charts look slightly different, but still there's no accumulation at all. We can also see that most tokens are on Base. They are not on Ethereum. There's clearly no accumulation. Maybe some whales are buying this bottom, but the vast majority of holders continues selling. Over here we've got Solana. The number of holders is by far the lowest, and again, no accumulation. So the dynamics are the same across all blockchains, across all wallet cohorts. Retail is not buying, the whales are not buying, and it's the same for Ethereum, it's the same for Base, and the same for Solana as well. Or in other words, it is justified that the virtual price is doing worse than all the other tokens recently. Again, this being virtual relative to Ethereum. Now, why do we see this rally though? Since the long-term holder charts are all the same, they tend to go down. How did we see a short-term outperformance of virtual of more than 200% in April of this year? I think the answer is short-term leverage, and we talked about this already at the time. When virtual was going up, I pointed out on this channel how it's just short-term leverage that's entering the token that might exit the token very soon, and this is now what we're actually seeing. Have a look at the trading volume of virtual. On the spot market, we saw 13 million in the last 24 hours. On the perpetual futures market though, we see much more. We saw 77 million on Binance, again in the last 24 hours. Most of those perpetual futures traders tend to bet on rising prices. So the longs have to pay the shorts to get more price exposure. The funding rates are positive. But the open interest on virtual tends to decline. Now what's open interest? It's the amount of bets on the derivatives market. And very often the amount of bets and the attention is correlated with the spot price. And the same is true for virtual's protocol. When the virtual price is going up, the open interest is going up as well. As the open interest declines, the spot price comes down as well. And currently, we are not yet at the bottom for open interest. We are on the decline, but we are not yet at those lower levels of April and March of this year. Now, the open interest increase explains why we saw that outperformance despite the spot market doing nothing, right? It was just the short-term capital that got in and that's now getting out, but it hasn't yet fully left. And that's what makes me quite bearish still on virtual. We are not yet at the bottom of open interest. We are only halfway there. Of course, while the price is going down and most people are betting on rising prices, we tend to see mainly longs getting liquidated. So this is the number of liquidations over time. And those liquidations, of course, contribute towards the decline of open interest. And the trading volume is going down as well. It's not yet at those levels of March and April. And again, this is where in the past the virtual bottomed. So the base chain isn't doing too well. The trading volume and the usage of the platform is incredibly low. The project is almost dead. There's no accumulation, no buying pressure happening from the spot market. It's the perpetual futures market that's actually driving the price action. This is where most trading volume happens. And on that perpetual futures market, we see the open interest declining. The bets on the price, on the perps, is what's moving the price. That's why we saw the outperformance. That's why we currently see the underperformance. And I do believe there's a good chance that we're going to break this support of virtual relative to Ethereum. Again, because we have only deflated in open interest partially. We still have 150 million worth of open interest, and this is likely going to drop to 50 million, potentially a bit less than that. The peak was at 300 million. Now it's interesting how those crypto cycles develop over time. As the price is going higher and higher, Bitcoin reaches new all-time highs, new people enter the space because the media is covering Bitcoin. People are wondering, should I also invest in the asset? The problem is most people don't just stick with Bitcoin. Most people want to figure out what's the next Bitcoin. Bitcoin is already high. Is there maybe another cryptocurrency that can do the 10x or the 100x returns? And that's then where crypto YouTube becomes a problem, right? Because many YouTubers pretend they know what the next 100 or 1000x altcoin is. Unfortunately, again, if you're trying to buy those altcoins, you're getting burned. Most people that enter the crypto space with those small altcoins just lose the majority of their funds. They have to make the losses first, then afterwards come to conclusions to potentially approach the market slightly differently. Because maybe that's you. In the last year, Bitcoin appreciated by 78%. But have a look at what those smaller altcoins did. How many of them did more than that? There is UPC, there is Cult, there's Dragon and Hosky, but the vast majority of these smaller altcoins lost massively. Now this is true for the altcoins from the market rank 900 to 1000. It's also true for the altcoins between 800 and 900. It's the same everywhere. Outperforming the already high return of Bitcoin is extremely hard. And I don't think the right approach is to find the one or two altcoins that might do so temporarily. There's another approach, and I'm using that approach for almost 4 years now. Had I just dollar cost averaged into Bitcoin, I would have gotten this light gray line in terms of return. But I got the return in black. So I outperformed just dollar cost averaging into Bitcoin massively. And it was not by trying to find the next Hosky or the next Dragon. Because here's how this channel is different. Most other channels, they take money from crypto projects or they buy a small crypto project and then use the YouTube audience just to shill the token, right? To just push up the token, generate some attention, then create some purchase orders with that and then dump on the audience. This is what most of crypto YouTube is doing. I never took any money from any crypto project and I never buy a cryptocurrency before talking about this here on this channel. I don't pump and dump on this audience. I'm also trying to be different by being more transparent, as in I share my performance. So the long-term performance versus Bitcoin we've just seen, but I've also now started trading with relative valuation bets using perpetual futures. Now this might have been a mouthful, but the idea is we want to bet on most altcoins doing worse than Bitcoin, Ethereum and Solana over time, because most altcoins go down over time. And here is when I started with perpetual futures trading. So this is a chart that's roughly 2.5 months only in duration. But during that time, I turned roughly 40K into roughly 60K, a 50% increase, again, in just 2.5 months. And I'm even going one step further. I don't just share my performance, I also want now the community to participate in that performance. I've launched a capital pool on a decentralized finance protocol called Hyperliquid, where a few select people get access to copy trading. So simply just provide some capital and get the same kind of performance. This started 2.5 weeks ago. It's so far up 4.7%. And I'm trying to push up the APR even further than that. The target is to maybe reach 50 to 60% APY. And here's how I'm doing this. I'm not trying to find the next altcoin. I'm not promoting small meme coins where I then dump on the audience. I'm doing the exact opposite. Because here's the reality of the altcoin market. Most altcoins work in a way of an expanding supply. So the project starts with just a small market cap and a small allocation of tokens that are floating. And then over time, the early investors, so the venture capitalists and the team and the other influencers that got paid in the token, they might get those tokens unlocked over time. So they don't get access to the tokens directly. They can only sell after a while. And they sell via that expanding token unlock. So what we see here is an example. This is the circulating BAL tokens over time. So this is Balancer. Balancer started out with roughly 19 million tokens and then expanded all the way up to 69 million tokens. The additional supply went to the founders, to advisors, to investors, and also to the usage of the platform. And so, surprise, surprise, Balancer underperformed Bitcoin very, very constantly. And this is just one small example. This website here, right, Tokenomics.ai, tracks how many tokens get unlocked over time. And on average, we have hundreds of millions of dollars that get unlocked. So if there is not as much inflow every single week in crypto, all those altcoins will do worse than BTC. And so the trick is really to turn this around. So instead of buying the next balancer, instead of trying to find the next 10 or 100x altcoin, we are flipping the situation around. When the insiders are dumping, we make money. So here's what we are doing. We are betting on falling prices of balancer and we go long in Ethereum. So suddenly we've got massive outperformance. We can go long in Ethereum, we can go long in Bitcoin. It's the same thing. Bitcoin, Ethereum and Solana are the only cryptocurrencies worth holding over the long term, where we don't have to rotate too much. And since beginning of the year, this particular trade already made more than 100%. Now, isn't it better to get into a position like this instead of finding the outlier in a sea that's all red? It seems more straightforward, right? It seems more intuitive. Let's just buy an altcoin and hope we pick the right one. It's an easy strategy to explain, but just because it's easy doesn't mean it's profitable. People lose with this strategy, especially beginners that don't know what they're doing, that just believe all of those random crypto YouTubers that say they know the next 100 and 1000x return coin. So a chart like this is the reason why I've got this long-term outperformance versus Bitcoin. Bitcoin already has very nice long-term returns. I think it's around 30% per annum, given the inflows that we currently see. If we want to outperform this, we can just bet on the relative valuation. The garbage will stay garbage. The garbage will not suddenly turn around and become better than Bitcoin. And so have a look at the individual trades of our community, right? This is a few wins that are shared by the members. There are potentially even hundreds of % in single trades. And what matters, of course, is risk management as well. Now, the vast majority of people in crypto lose, and that's in the nature of things, right? If we double our money, somebody else has to lose everything if the market as a whole isn't growing. Thus, if we want to get outperformance, we have to take it from somewhere. Now, my target with this community is to make the majority of us here winners within crypto. So the rest is okay to lose, but we want to be winners, and we do this by having an edge, by doing strategies that most people don't follow. And so here's my offer. I want to make everybody become a winner once they join this community, the premium community of this channel. And here's how I do this. You just have to watch 2 videos, this one over here, using perpetual futures on Hyperliquid to bet on relative valuations, and this one over here, risk management with relative valuation bets. It's very, very important you watch both of those videos. It's 1 hour in total, a bit more than that. And once you've watched that, I will share this trade with you. It's not Balancer, it's something else, but it continues to outperform extremely constantly as well. And I'm that confident in that trade that in case you do not make money with this trade in the first month, so if you enter on day 1, you exit on day 30 or 31, and you don't make money with the trade, then I will refund the entire premium membership fee for you. Yes, I do take a little bit of risk with that offer, right? There are some phases where this chart is not going up in the span of a month. But in general, the odds are very much in our favor that this will continue to print money. Buying this chart over here, again, which is caused by token inflation, is much, much better than trying to find the next Hosky based on a YouTuber that doesn't really know what they're talking about. And so here's that membership fee. It's $125 per month. Again, it gets refunded in case you don't make money with that first trade. Simply join, watch those 2 videos, execute on the trade, make your first money back, and then hopefully learn more along the way. Because that's the long-term plan, right? We want to skill up as much as possible, help each other in the community as well, share potential trading ideas, and then become the small group of winners in a vast sea of losers in this player versus player crypto game. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.